As home prices continue to rise, the question becomes is this sustainable? And are we possibly setting ourselves up for a crash? Hi, this is Andrew with the S2 real estate team of EXP Realty. And this is a topic, rising home prices and whether or not the market was going to crash. I've covered in the past, but considering how the market has started here in 2022 and multiple offers, bidding wars are still going on in many markets around the country, and prices continue to go up, I thought it was a good time to take another look at this and share the latest information I have with you. Now, a recent survey was just released, I should say, and it showed that 77% of all potential home buyers now feel that is it's not a good time to buy a home. And I can understand that completely. I mean, for anyone that's been in the market to buy, and they've watched what's gone on, especially over the past year. It's about this time last year, at least here in Frisco, Texas, where we started to see multiple offers and bidding wars become the norm. And that's been that way across the country in a number of markets. And, it's been going on so long, people get nervous. Are we in a bubble? That talk's been around for quite a while right now. And, there's more and more videos being produced on why the market's going to crash this year and this and that and back and forth. And I understand it. I mean, people are getting nervous and there's a lot of misconceptions out there. And again, if you've watched any of the videos I've produced in the past, hopefully by now you'll know I'm not sharing this information to convince you one way or the other. Only you can make the best decision that's right for you and your family. But I just want to make sure that you make that decision based upon right information, not based on fear, not based upon an opinion, although, we do lean on the opinions of experts as we need to, but it's based upon actual information that you can use. So with that in mind, there's a couple of things I want to look at. And the first is, why do home prices continue to increase the way that they have? And in the second part of this, when we talk about are we setting ourselves up for a crash, what people are most concerned about is that we're going to repeat 2007, 2008 again, which I will say I don't believe. I've never believed that. I was doing real estate at that time, and a lot of the market dynamics and the situations we're seeing today are nothing like they were back then. So we need to take a look at why what is happening now is happening. So first, why are home prices rising? Why are they going up as fast as they're going up? Supply and demand. And I know it sounds like I'm beating an old drum here, but supply and demand is what controls the price of any good or any service. That's just the way it works. Okay. Supply and demand controls everything. And what we have right now is we've had exceptionally high demand for two reasons. One, actually for three reasons. All right. So the first is we have millennials coming into the market. It is the largest segment of the population there has ever been, and they are now approaching prime home buying age. So you have more new buyers entering the market than at any other time we've seen in history. Number two, the pandemic. The pandemic changed people's definition of home. And what's become apparent now is that working from home is, in many cases, here to stay for a vast number of people. Maybe not entire companies staying remote, but certainly departments, tech support, things like that are staying remote. And that has allowed people the freedom to move to different areas where they can work remotely. Many have moved out of bigger cities and started migrating towards areas that offer them possibly a better quality of life and more affordability. And then the third part that ties in with that is the exceptionally low interest rates that we saw as a result of the pandemic. 30-year mortgage rates at 2.65%. I mean, that's not historically the norm. And it also added to the demand that we've been seeing. But again, I say this is not like what we experienced last time with regards to the market and why prices are rising. Inventory is what's controlling a lot of it, coupled with that demand. So I've already explained one of the reasons why we have such high demand. On the flip side of that, you've got inventory, and inventory continues to fall. The fewer homes that you have for sale, the more expensive those homes are going to be. Now I'm going to share my screen here for a second and cover a few different markets to show you exactly what I'm talking about. All right, first and foremost here, what we're looking at is a market report for Frisco, Texas. I started with Frisco, Texas because that's actually where I'm based. And these market reports are available for every single city and zip code in the entire country. So if you'd like to see your specific area, please go ahead and click the link in the description below this video, and you can take a look at the current stats and trends in your specific market. And if you do that, there's two things I'd like to point out. So as I said, this is for Frisco, Texas, and this is as of Monday, February 7th. This first graph that you see here, the market action index, think of it like a speedometer. Okay, the further to the right this needle goes, the hotter the market is. Okay, so right now on a scale of 0 to 100, the market here in Frisco is running at 93. That's up from 89 just last month, and it continues to get hotter, especially as we move, further towards the traditional busy times of March and April and May. So if you look at this for the market that you're most interested in, just know that you'll see this index, and the further to the right that needle is, the hotter the market is and the more competitive it's going to be. Now, as I scroll down here, you can take a look at several different trends, but I'm looking just at inventory, and this is going back 3 years. So I'd like you to note that inventory starts the year lower, it trends up, comes back down as we move through the year, hits a low point, trends up, goes down. The bottom line here is for Frisco, Texas, you can see that over the past 3 years, inventory has been falling. I mean, you look back here, we started the year in February 2019 of about 740 homes for sale on the market to where we are right now. I can tell you as of this morning, there's 53. Okay, so that's not a lot, especially when you consider how fast the population in this area is growing. But the main thing I wanted to point out with regards to this is you can see the definitive overall trend down in inventory. And this is across all market segments, all price points. The amount of homes for sales continues to fall. Now, right here, now I'm looking at San Diego, California. So we're going West Coast. You can see here, also a strong seller's market. Their market action index is currently running at 88, which is actually down slightly from last month of 89. So not a big change, so it's still an extremely competitive, strong market. Again, let's look at the inventory in San Diego over the last 3 years. Not quite as low as we're seeing currently in Frisco, but San Diego as a city is a larger market than Frisco is, so I would expect to see more overall homes. But the important thing to point out here is, once again, going back to February 2019 to now, we have a downward trend in inventory. So the number of homes available continues to fall. Now, another one here, if we look at another market, I'm going to look at Phoenix, Arizona. All right, so again, market that's pretty active this time of year. The snowbirds are in town. You can see right now they have a market action index of 80. Not quite as hot as Frisco or San Diego, but still a very strong market. That's an increase over the 75 that they saw last month. Now, again, when we go down to inventory, same thing once again. We have inventory all the way up here back in February 2019, and an overall continual decline in the number of homes for sale as now we're in February of 2022. And to round it out, the last market, this is Baltimore, Maryland. Okay, so again, vastly different market to what the others are, and you can see that by the market action index. Here, the market action index is only a 57. So again, nowhere near as hot or competitive as the markets in either Phoenix, San Diego, or Frisco, but it's still an increase of where it was from last month. Last month, I'm sorry, last month was a 55. Now it's running at a 57. So ticking up just slightly. But once again, if we go down to the inventory, same thing. We go all the way down here and we look at this inventory, and we can see that inventory, again, over the past 3 years, has consistently been falling. So again, supply, right? Supply is very, very important because that's what's causing the prices to go up. There's limited supply, as you can see here, in a sampling of markets across the country. Now, as a comparison, when we start talking about bubbles and crashes and things like that, how does this compare to where we were prior to the crash previously? Well, I've got a couple of graphs here to show you on that. So here's what was going on with supply in the 4 years previous to the previous housing crash. So we're going back to look at what inventory did. So 2007, 2008, 2009, 2010. Now, when the market hit its bottom will depend on where in the country you were. At that point in time, I was on the West Coast. We saw things start to decline towards the end of 06 and hit pretty hard in 07. Others lagged behind us a little bit. But as you can see, months of inventory, 9.6, 9.4, 7.3, 8.5. What this is basically saying is when you start talking about the supply of homes and the months of inventory, it's saying at the current pace of sales, how long would it take for all of the existing homes on the market to sell, right? A balanced market that doesn't favor buyers or sellers is generally considered about 6 months. Anything above 6 months, you start to see a market that favors buyers. They're more in control. When you get below 6 months, the market tends to favor sellers. Now let's take a look at the last 4 years, 2018, 19, 20, and 21. Quite a bit different, isn't it? I mean, 3.7, 3, 1.9, 1.8. You can see that over that time, inventory has actually been falling. So supply is going down. So no surprise, we just saw that on the graphs I showed you for Baltimore and San Diego and Phoenix and here in Frisco, Texas. So again, going down. But on the flip side of that, that's great to say the supply is going down. Let's look at demand. Okay, I already started out at the beginning of this video by talking about demand in the fact that we've got the millennials, we had record low interest rates, and we have remote work changing the migration patterns and where people are living. But when you look at it, it's not as though people aren't buying homes. Here's what's actually going on. In 2021, home sales hit a 15-year record. So as fast as homes come to market, as fast as they're being built, they're being snapped up. You can see here, 5.34 million homes sold nationally in 2019, 5.64 in 2020, and 6.1 in 2021. It was felt as though that 6.1 number could be even higher, but there simply wasn't anything to sell. So again, are we in a bubble? I don't know. Are we? Prices aren't going up artificially. Bubbles occur when there's an artificial increase in the value of something. I'm not sure what's artificial about this imbalance between supply and demand. It's following natural economic laws. Saying that, can it continue to go up like this forever? No. Affordability is going to take a hit, especially with mortgage rates rising. Last week, the jobs report came out and substantially more new jobs were created than was anticipated. So the economy is performing well. The economy is strong. That's helping to offset the home price increases and the mortgage rate increases to a certain extent. The better the economy is doing, generally, the more people that are employed, the more people that are making more money. In certain markets and in certain areas, Have prices gone up to the point that certain buyers are being priced out? Absolutely. It definitely has. I'm not going to argue that fact. They are being pushed further and further out from the city centers. We experienced this again in Southern California. In the area where I was living at the time, it was considered a bedroom community for Los Angeles, San Diego, and Orange counties. Now here I am in North Texas, and the areas of growth are getting further and further out from Dallas and Fort Worth, simply due to cost. Understand that completely. The other aspect is, again, looking at it, one of the things that brought the market down previously that helped contribute to the crash was the mortgage industry, mortgage loans. The bottom line is loans were given to people that shouldn't have been getting a loan. They weren't qualified to buy. Plain and simple. It was an insatiable greed to originate new loans, which there's the artificial demand that was created that kept pumping things up, which we aren't seeing. Here's a look at how that is. If you look at the years between 2003 and 2007, this is taking a look at the volume of mortgage loans that were originated in the billions of dollars to people with a credit score lower than 620. Okay, $350 billion, 375 in 2006. And look at what happened since, right? So the amount of people with a lower credit score actually getting a loan, you're hovering at 50 billion or less. It's substantially less than what we saw previously. It's not the same thing at all. So with that in mind, it's important to know that, yes, it's scary what's going on. It's difficult if you're trying to buy a home. I understand it. But to say just because prices are going up, we're in a bubble, and to say that it's not sustainable, it kind of raises some questions, to be honest, because right now the market is just reacting to exactly the way a free market is supposed to react. I'm not saying it's good, bad, or indifferent. I'm just saying it is what it is right now. So again, there's a lot of people that sat on the sidelines hoping that prices were going to come down by now, and they haven't. We are still continuing to see prices go up as we enter 2022. And that looks as though it's going to continue. They're not forecasting prices to increase as much in 2022 as they have in the past. That's supposed to come back down. And part of the reason is we're expecting to see a little bit more balance between supply and demand. The Fed's now talking about raising interest rates up to 5 times this year. That's up from 3. We'd already projected that mortgage rates were likely to climb to about 4% by the end of 2022. Considering how strong the economy is, it's looking as though those rate increases are going to be a little bit sooner than expected. So again, mortgage rates are more closely tied to the 10-year Treasury bond. Check out the link below to last week's video, and I go through and explain what you need to look out for to see where mortgage rates are. And at the same point in time, as the prices and the mortgage rates go up, we will see demand soften a little bit. As I mentioned, some people will absolutely be priced out. At the same point in time, there's a record number of new homes being built, and in order to try and help generate more supply. So I do believe that we're going to see some balance come back between supply and demand. It's not going to happen overnight. It's nothing you should expect to see in the next 3 months or so, but it will slowly start to happen depending upon where in the country you are as we move further through this year. So hopefully you find this information useful. If you do like it, please go ahead, subscribe to this channel, hit that little thumbs up, the bell icon to be notified when I release new videos. And if you have a particular situation that you'd like to discuss in more detail, or you have questions, please don't hesitate to reach out. Always happy to talk to you. You can give us a call at 888-447-9650 or send an email to contact@s2realestateteam.com.